Okay, sorry about that. I seem to have cut you off there. I meant to pause, but I stopped the video. So this video is going to be in two parts instead. Like I said, we're going to start on the depreciation side of it. Okay. Now, the big difference in calculating depreciation this time is from the ordinary level is that we have land and buildings and we have machinery. We have two different sets of fixed assets instead of just a fixed assets listing. Okay, so in that case, the figure that we're going to put in here for depreciation is going to be the annual depreciation for the land and buildings and the annual depreciation on machinery. Okay, so we rely heavily for this one on some of the information that's in here. And if we look at part 3 here, it says depreciation charge for the year on buildings in arriving at operating profit was 42,000. So that's great. They just tell you what the depreciation on the buildings was, 42,000. So I'm just going to write that down here for a start. That's one part of it. So all we really need to do then is find the depreciation for the year on the other lot of fixed assets, which is the machinery. And we do that in the same way as we did it in the ordinary level. We look at what the accumulated depreciation was up until the end of 2015, which is 163,000, and we see what it went to at the end of 2016. It went to 185,000, and we just subtract 163 from 185 and we get 22,000. So over here then, plus 22,000 is 64,000. And that's our depreciation for the year there, 64,000. Now, just a note on that, I suppose one or two things. First of all, in this question, they gave us the depreciation charge on buildings. It could have been the other way around, where they gave us the depreciation on machinery, and then we had to go and calculate the depreciation on land and buildings. But in every question, they tend to give us one of them and ask us to calculate the other one. Now, the reason they have to give us one is because you could not use the information in here to calculate the one that they've given you. So for instance, if you look, we used the information here, 163 from 185 to give us this 22 figure. Had we tried to do the same for land and buildings, it would have been 60 from 75, giving me 15,000. But they say it was 42,000. So there's obviously something different going on there between the land and buildings and the machinery entries. And the reason, or the difference, a big difference there is that there must have been some purchase and sale of different items during the year, different fixed assets. So if we look at here, it says there were no disposals of machinery during the year, but new machines were acquired. The important part there is there were no disposals of machinery. Because there were no disposals of machinery, that's why we were able to do a quite simple 163 from 185 to get the annual depreciation. And I'll explain why in a moment. Here it says, new buildings were purchased during the year, buildings were sold during the year. So it doesn't matter about the figures for a moment. Buildings were sold during the year. That means they were disposed, if you like, disposed of. And that's why you cannot just assume that you can take the 60 from 75 in order to get the annual depreciation. As we can see, you couldn't. It wouldn't have worked out the same figure there. Now, the reason is that when you dispose of a fixed asset, what happens? The depreciation associated with that fixed asset that you've been recording in your books for every year since you purchased that fixed asset must be taken from your books. You must take any depreciation associated with that asset out of your books. So if we sold some buildings during the year, well then the accumulated depreciation was 60,000, and then it went down by whatever amount the depreciation associated with the buildings we disposed of was, and then it also went back up by the annual depreciation, eventually getting to 75,000. So it wasn't a straight route from 60 up to 75. 60 minus whatever the depreciation on the disposed asset was, plus whatever the annual depreciation was to get up to 75. And we'll use that later on in the question, that information or that knowledge later on in the question. Okay, but safe to say that they'll always give you one, and the other one should be the asset that there were no disposals on, and you can just use the simple one minus the other to get the depreciation on it. Okay, that's that. And finally, loss on sale of fixed asset. Now, this is an interesting one because In part 2 here of the additional information, it says new buildings were purchased during the year for 200,000. Buildings were sold during the year at a loss of 15,000. So here, quite simply, they tell us what the loss on the disposal of that fixed asset of those buildings was. It was a loss of 15,000. So we can put that straight in here, and the rule for this is add on a loss of on the disposal of a fixed asset, subtract the profit on the disposal of a fixed asset. So that's very straightforward, and we can just tally this then afterwards, and it's no issue. I think that's 186, is it? Let's just make sure here for a second. Yeah, 186, we're all right. So here, back to this just before we sign off on this video. Buildings were sold during the year at a loss of 15,000. So in this second part, they give us some information. They say we purchased buildings for a certain price. They say we sold buildings for a loss of 15,000. In this question, we do not have to calculate what the loss is. They tell us what the loss is. But it's not the same in all of these questions. Sometimes what they tell us, instead of giving us the loss, they tell us how much the buildings were sold for. They'll say new buildings were purchased during the year for 200,000. Buildings were sold for 50,000, and you don't know whether they were sold at a profit or a loss, and you have to work that out. Now, when they give you this figure of a loss of 15,000, it makes it very easy then when you're doing this part, this reconciliation statement. If they had told us the amount it was sold for, we'd have a bit of work on our hands, some calculations to do, tricky enough calculations to figure out how much the profit or the loss was. However, you're not getting away with it in this question, because when they give you the loss, it means they haven't told you how much the buildings were sold for. And if you had to calculate the amount that the buildings were sold for, it would involve those same tricky calculations that I described earlier. And when you go to do the cash flow statement, the next part of the question, you will need to know how much the buildings were sold for. So you'll either get caught to do the tricky calculations here if they don't give you the profit or loss, or if they do give you the profit and loss here, you'll get caught to do the tricky calculations in the next part when you're required to put down how much you got when you sold the fixed asset or when you disposed of the fixed asset.